And at midnight tonight, June 30th, the business in India will change forever. The goods and services tax will subsume most of the indirect taxes that are currently levied, and taxation will be simplified. But what is GST and how will it impact us? WION finds out.
The goods and services tax is claimed to be the biggest and the most far-reaching tax reforms India has ever seen. With the launch of GST, India will join the list of nations where taxation has been simplified. GST is a destination-based tax levied on consumption, and it will replace all other indirect taxes. Like other taxes, GST will also be levied and paid when a consumer buys something. GST will also be levied on every transactions in the supply of goods and services, barring certain exempted items. The tax levied at one stage can be set off or deducted from the tax to be paid at the next stage as well. GST will be one tax, one nation regime where all goods and services will be taxed at 0%, 5%, 12%, 18% and 28% wherever they are purchased. There is a higher tax called sin tax on goods like aerated drinks. GST also reduces the tax burden on the final consumer since it ends the tax on tax phenomena, also known as cascading effect. Now a tax paid at one stage can be deducted from the tax paid at the next stage, reducing overall tax incidence on the item. But not all items will be subjected to GST. Alcoholic drinks, electricity and 5 petroleum products, crude, petrol, diesel, natural gas and aviation turbine fuel will not be under GST and will continue to attract VAT and central excise. India will have a dual GST. This means that the single rate set for good or service has two components, a central GST and a state GST. So 9% of an 18% GST goes to the center and the other 9% goes to the state. There is also an integrated GST on the interstate supply of goods and services, which can be set off against CGST and SGST that is to be paid. GST will replace all central taxes, including central excise and additional duties of excise, service tax, countervailing duty in the case of custom duty, central surcharges and CESSES. And also, GST will replace state tax including state VAT, central sales tax, luxury tax, all forms of entry tax, entertainment and amusement tax, taxes on advertisements, purchase tax, tax on lotteries, betting and gambling, state surcharges and CESSES. But will GST trigger inflation or bring down prices? Normally GST would have pushed up inflation, and that is what happened in most countries that switched to GST. The inflation spike lasted from between 6 months to 2 years. But in India, the state and central GST acts have a provision which mandates that manufacturers and service providers will have to pass on any benefit from reduction in tax rate or availing of input tax credit to consumers in the form of lower prices. The provision was introduced at quite a late stage because of the fears that companies may not lower prices even if it is warranted and trigger inflation. There are stiff penalties for companies not passing on benefits, which include companies losing their central GST registration. Bureau Report for WION.
It's the single biggest tax reform.
1 जुलाई से GST का प्रारंभ हो रहा है.
Endlessly discussed and debated, the GST is finally arriving. On the intervening night of June 30th and July 1st, MPs will converge at the Central Hall of Parliament, but politics prevails over reform.
GST के मुद्दे को लेकर
Indian National Congress cannot be party to such a tamasha.
Every move scrutinized, every aspect analyzed.
Petty politics over national interest.
GST